Welcome back to the channel. I'm Algabot, and today we're studying a pure price action expert advisor for MetaTrader 5 called Tower Plateau Reversal. This one uses no indicators at all. Instead, it reads a classic candlestick shape known as the tower top and tower bottom, a formation built from a tall pillar, a flat resting base, and a second tall pillar that fires back the other way. Over the next few minutes, we'll unpack how the pattern is defined, how the code detects it, and how it places its stop and target. Remember, this is educational content only and never financial advice. Let's start with the big picture. Tower Plateau Reversal is a reversal system that works entirely from raw price geometry. There are no moving averages, no oscillators, and no indicator handles. Every decision comes from the open, high, low, and close of recent candles. The pattern it hunts for is red left to right in three parts. First comes a tall left pillar, a wide-bodied candle that thrusts price into a fresh local extreme. In a downward move, that's a big red candle carving a new low. Next comes the plateau, a run of several small, tightly contained bars where the push stalls and the market hesitates. This is the resting base, the moment of indecision after an extended drive. Finally comes the tall right pillar, a wide-bodied candle that fires back in the opposite direction and closes clear of the plateau, signaling that the earlier thrust has been overturned. When that shape completes at the bottom, with a down pillar, a flat base, and an up pillar breaking upward, the strategy reads it as a bullish exhaustion signal and looks to buy. When the mirror image completes at the top, with an up pillar, a flat base, and a down pillar breaking downward, it reads that as a bearish exhaustion signal and looks to sell. To decide what counts as a tall pillar and what counts as a small plateau bar, the EA computes its own average true range over the window of candles that comes before the tower. That way, everything is judged against the market's normal range in that period, not against a fixed number of points. This approach is designed for traders who want to study candlestick exhaustion patterns in a systematic, rule-based way. It can be applied to whatever single time frame the backtest selects. As always, trading carries real risk, and losses are part of the process, so treat this purely as a learning tool. Now let's walk through the exact logic. The EA only evaluates once per freshly closed bar, so it isn't reacting to every tick. It also checks it has enough history, and it holds just one position at a time under its magic number, letting the stop loss and take profit manage the exit. First, the strategy measures volatility. It computes an average true range over a window of bars that sits before the tower, using the ATR period parameter, which defaults to 14. This ATR becomes the yardstick for everything that follows. Next, it inspects the plateau, the middle section of the pattern. With plateau bars defaulting to 3, it checks each of those bars in turn. Every plateau body must be small, no larger than plateau body multiple times ATR, which defaults to half the ATR. On top of that, the full high-to-low span of the plateau must stay tight, within plateau range multiple times ATR, defaulting to 1.3. If any bar is too big or the base is too wide, the setup is rejected. Then it checks the two pillars. Both the left pillar and the right pillar must have wide bodies, each at least pillar body multiple times ATR, defaulting to 1 full ATR. These are the tall bookends around the quiet base. The strategy also confirms the tower carves a genuinely fresh local extreme. It scans the loopback extreme window, defaulting to 20 bars, and the tower's low, or high, must push beyond that prior range. This filters out patterns that form in the middle of a range rather than at a true turning point. For a tower bottom, the left pillar must close down, the right pillar must close up, the right pillar must close above the plateau ceiling, and the tower must mark a fresh local low. When all four are true, the EA signals a buy. The stop sits just below the tower's low, buffered by stop buffer multiple times ATR, and the take profit is placed at reward risk times the risk distance, defaulting to 2 to 1. The tower top is the exact mirror. The left pillar closes up, the right pillar closes down and below the plateau floor, and the tower marks a fresh local high. That triggers a sell, with the stop just above the tower's high and the target again at the reward to risk multiple below entry. Let's read this the way we would inside MetaEditor. At the top are the input parameters. PlateauBars sets how many quiet bars form the base, defaulting to 3. ATR period defines the volatility window. Pillar body multiple, plateau body multiple, and plateau range multiple are the three shape filters for tall pillars and a flat, tightly contained plateau. Loop back extreme sets how far back we check for a fresh extreme. Stop buffer multiple pads the stop beyond the tower, and reward risk sets the target multiple. Now the buy block. The strategy first takes tower low, the lowest point across both pillars and the plateau. The tower bottom condition is true only when the left pillar closes down, the right pillar closes up, that right pillar closes above the plateau ceiling, and the tower low sits below the prior lows. When all of that holds, the entry is the ask price. The stop is placed below the tower low, buffered by the stop multiple times ATR. The risk is the entry minus the stop, and the take profit is entry plus reward risk times that risk. Then trade.buy sends the order tagged tower bottom. The sell block is the mirror. The strategy takes tower high, the highest point in the pattern. The tower top condition needs the left pillar closing up, the right pillar closing down and below the plateau floor, and the tower high above the prior highs. Entry is the bid, the stop sits above the tower high, and the take profit is entry minus reward risk times risk. Then trade.sell fires the order tagged tower top. Both sides are symmetric, driven entirely by candle geometry. Let's walk through this chart candle by candle and watch both a long and a short setup unfold. On the left, price is drifting lower. The first few candles step down quietly, each closing a little beneath the last, establishing a recent range of prior lows. Nothing has triggered yet. The strategy is simply watching and measuring the market's normal range with its average true range before any tower can form. Then the left pillar appears. This is a wide, tall down candle that thrusts firmly lower and carves a fresh low, pushing below every low in the preceding window. That is the first ingredient of a tower bottom, a decisive downward thrust into a new extreme. On its own, it means nothing. The strategy now waits to see whether the market stalls. And it does. Over the next three candles, we get the plateau. These are small-bodied bars, tightly packed together, each body no larger than half the ATR, and the whole cluster stays within a narrow band. This is the resting base, the hesitation after the drop. Sellers pushed price to a new low, but they can't extend it. The crowd is undecided, and the market is coiling right at the extreme. Now watch the right pillar. A wide-up candle forms and closes clear above the plateau ceiling. This is the confirmation the EA is looking for. The left pillar was a down thrust into a fresh low, the base went flat, and now a tall up candle fires back the other way and breaks the top of the base. All four conditions are satisfied, so the buy entry marker prints on that candle. The stop is tucked just below the tower's low, padded by the ATR buffer, and the take profit sits above at 2 times the risk distance, because the default reward to risk is 2 to 1. From there, price follows through. The next two candles push up steadily, each closing higher, and price reaches the take profit target above. The long trade is complete, exiting at its planned target rather than on any discretionary decision. Now the market keeps climbing, and a mirror setup begins to build near the highs. A tall up candle drives price into a fresh local high. That's our new left pillar, this time an upward thrust. Right behind it, 3 small, tightly contained bars form a second plateau, a flat resting base sitting right at the top. Buyers stretched price to a new high but stalled, just as sellers did at the bottom earlier. Then the right pillar fires. A wide down candle forms and closes below the plateau floor. The left pillar was an up thrust into a fresh high, the base went flat, and a tall down candle now breaks the bottom of that base. The tower top is complete, so the sell entry marker prints. The stop sits just above the tower's high with its ATR buffer, and the target is placed below at the same 2 to 1 reward to risk multiple. Price then rolls over. The final candle drops firmly and reaches the take profit target below, closing out the short. Notice how both trades use the very same idea, an extended push, a stall, and a decisive flip in the opposite direction, read purely from the shape of the candles. That symmetry is the heart of the strategy. And of course, not every tower follows through like this, which is exactly why the structural stop is there to define the risk on every trade. So that's the Tower Plateau Reversal Expert Advisor. We covered how it reads the tower top and tower bottom pattern from raw candles, how it uses a self-computed ATR to judge tall pillars, and a flat plateau, and how it confirms a fresh extreme before signaling a buy or a sell. We also walked through the MQL5 code for both sides and traced a full long and short example on the chart, complete with structural stops and reward-to-risk targets. Remember, everything here is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losses do happen. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy studies. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.